Good day, Market Chameleons, and everyone joining us for the first time. Thanks for coming by for the after hours show with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and show, are for informational purposes only concerning tools and products. With that, one last look at the disclaimer, and let's welcome Ryan to the stage. How are you doing today, Ryan?
I'm doing well. How about yourself?
Great. Let me share your screen. There you go. What do you have for the Chameleon community today, my friend?
Yeah, so I mean, it's a good day today, I think, for the most part. I mean, just looking at let's go over here real quick and look at some of the broader ETFs. You can see your QQQs. I mean, it's poised for making new highs here. So took out all this action, looking really good there. SPY, very similar, very close to breaking out. IWM, on the other hand, basically is kind of really struggling to kind of get it going. Diamonds had a tough day today with UNH news. Basically, there was a note from Trump and I call it CMS, basically saying that they're going to be reducing or basically putting out a proposal for the Medicare Advantage 2027. And they really just kind of fell between UNH, Humana, even a CVS was down on the news. So there's probably a ton of names that kind of felt the pressure there. So Diamonds just felt the pressure, right? It's gonna be a little more difficult for them to get going. But I think you look at the semis overall, they top tick, made a new all-time high here today. So that's a good sign. Not all of the semis were kind of in line. So I think that's something we can get back into Market Chameleon, start to look for where some of the movement was, look for maybe some UOA, see if there's anything that's moving in here. Here's the list of right on the top, right from the front screen of the UOA that hit top volume that's coming in. And I like to go through here and just kind of see what's in here. One, for themes. So if we have something that is, you're seeing a lot of the same sector, then that's one thing. So obviously something like a silver is kind of hitting here. SLV, you have AG, you have SILJ, you have HL. All those are all names that are pretty big in the silver space or silver mining space. A couple of these are news driven, like UPS had earnings. GLW had a deal with Meta, so they're all kind of news related. USAR basically did a deal with the US. Basically, US is going to be investing in them. And then a couple other names like Rich Tech Robotics had a really good looking chart. And just to go over to show you that chart, they just popped, right? It was a good volume and they just started to scream. So something like that, maybe a little overdone. If you want to draw like an RSI in here, maybe a little overextended already because it's a big candle, biggest candle I think we've had on this. Maybe, nope, still bigger than this one way over here. So it's a pretty good looking chart, pretty good looking market. So coming back into that, a couple other names that I want to highlight, EEM, just on the charts here, because I think that's looking very interesting in terms of not only do we have more paper in here, but this is really starting to explode. This has been in a great run, continues to move higher. You look at options on this is cheap because it's not moving that much from an ATR perspective. It only moves like 65 cents a day. So the options on this, if you want to play something for, I don't want to do that one, do positions for option chains. And you come over into here for, let's say, Friday, you can get into an at the money option for probably pennies, right? I'm going to say probably 30 cents. I'm off by a little bit. You can get the 60/50s stock trading to 60/36 for 67 cents. So if you think that's going to continue to run here, you got Wednesday, Thursday, Friday, right? Maybe that's something you want to take a stab at. A little bit cheaper for, in my opinion, to play that way. There was news in Redwire. There was some, I think they got a contract from the government on that. So a lot of these are news driven. Starbucks is going to have earnings tonight. Critical Metals is one that's trying to come back a little bit. CVS was bearish on the news. GM had earnings. So a lot of these, Ford had earnings, I believe, or going to have earnings. So a lot of these are news driven. You probably just want to shy away from, unless you're looking at something like silver and say, I want to look at silver from a perspective of, okay, it's pulled back. Is it time for a potential kind of buy the dip mentality here? Is this something that I want to then jump on and say, maybe it's time to start to go back into this? If you did get out, take some profits. I think it still looks strong, right? I think it's the highest close we've had here, closing at 101.55. Is that correct? Yeah, it looks to be correct. So that looks pretty awesome. It was much higher. I'm not getting the same wick on that this is the SLV, that's why. So versus the futures did have a bigger run on this and was looking all right. So SLV, I think still from, I know a lot of people are going to ask about silver because I've been on it since July and pushing this thing as much as possible. Mainly just because I think it's a great opportunity. A couple things still keep in mind. There's still a differential between what's going on in Asia spot price and what we have here. So we're still being held in check by some extent, right? Not it's getting better, but it's still up on the upper ends of the differential. So I'll give you an example. We have spot prices of 112, 115, 120, depending on which country you're looking at in Asia. And then you come back over in here and our spot price now is, again, was 106, 107. So we still have these differentials that are a big thing. We're starting to see some of the, kind of on my list of things that I want to start to see for this to become a mature move. One is deals from companies that use silver in their products going to make deals with some of the miners. We're starting to see that. I've seen 2 or 3 deals like that start to happen. We haven't seen any major acquisitions. We're barely just getting through the earnings cycle. So I think we're just getting into a new earnings cycle here, having a lot of big names here this week. Meta, Microsoft, Google, what else is Meta, Microsoft, Google, and Apple this week. You're going to have Amazon. No, Google's not this week. I'm sorry. You're going to have Amazon and Google next week. So you got to keep the Apple, Meta, and Microsoft on your radar. They're probably moving a little bit in terms of aftermarket, right? In terms of the action in here. So we have closing of 473. Again, we'll have to see how these start to play. One of the things, just for if you are looking at putting on trades and trying to get a gauge of where this can move, the first thing I would look at is the straddle. So way I kind of cheat and do that, we have this in the simulate, and it gives you an idea of where the straddle is. And if you're trying to put trades on, you can look at give yourself a good idea. We have a box that automatically shows you, depending on the expiration that you're looking at, that will vary. So obviously, if you're looking at a closer term, it's going to be shorter. The further out you go, it's going to get a little bit wider. But it's important to kind of understand if you're doing some type of iron condor or a spread, and do you want to be beyond that level? Do you want to be, if you're selling, you want to be beyond that level? If you're buying, where do you want to be in terms of positioning yourself in terms of what that stock can potentially do, right? If I do a really tight spread, it may not work out. If I get a little bit wider because the straddle suggesting that it can go a little bit bigger, then that's something. So if I move this from, let's say from here, you can see I'm somewhere around, I don't know, 465 to 495. If I do like in April, that should get bigger, and select my April, then you can see I'm now like 457 to 507. So that just kind of give you an idea of where the straddle is and how that could play out into your decision making, and how wide you can get based off of the strikes that you're selecting. So I would highly encourage you to do that. And typically what I try to do if I'm doing some type of call spread, a call vertical in an earnings cycle, I'm going to be selling up close to where that upper end of the straddle is. So if I'm up here, I want to be selling like 507. If I'm in the near term here for, let's say, the Feb 6s, then I want to be probably selling something like the 495s, right? Saying, okay, I'm close to this, but I probably want to sell. That's where the market makers are saying or suggesting, based off of the implied volatility, that is a good spot where they think the straddle will be placed based off the implied vols that they're buying and selling at the time. So that's a couple things. Just to come back, we do have a very busy week. You're going to have the Fed tomorrow, so that's something to keep an eye on. That's tomorrow at 2 o'clock, and you're going to have that at 2:30. You're going to have Powell talking at 2:30, and then you're going to have all the talking heads coming back onto into the, I guess you'd say, into the rotation of talking. So that's important to understand. So coming back in, let's just do another kind of scan back here on our, let's just do stocks and look at the overall kind of viewpoint here of, let's see, I want to do market movers. Let's see what we can come up with on that one. And come on, that's probably my system. So again, you're seeing most active, gainers and decliners. Gives you a really good feel depending on which way you're looking at this market. And again, you can filter down through this list of really, this is going to be your volume and how active they are. Your gainers, obviously there's some in here that you're like, I've never even heard of. XHLD, I've never traded. It's a $3 stock. GITS, I've never traded it, but for some reason it's moving, probably news related. Then you have like that Rich Tech we talked about earlier, and a couple other names in here that you may want to start to pay attention to, right? Something, you know, some of these smaller names that are starting to move, or even decent sized names like an APLX. I don't know it, but was up 28% today. Had some decent stock volume, has a market cap, maybe a little too small for you to trade in terms of market cap. Maybe you want to do a search on just market caps and play the bigger ones like GLW, IREN. IREN, I thought was a very good looking chart. So if I go back over to that one real quick on the charts, let's go to there real quick to show you that. I think that's a really good idea as this is starting to break out. And you can see we're finally getting to that point. A little bit lower volume. I like to see a little bit bigger, but that one to me is a nice little trade. You reached a high of 60. So we closed, I think, pretty darn close to the high. So I would probably use a level maybe slightly above that if I can find one. Probably something like maybe a close over here. That close is 60.75. So let's do a quick entry bot on that and get into an IREN greater than 60.75. And I just want to add an option. And I'll do, I don't think it has 61s. It does have 61s. I'll buy the slightly outs on this one and do that for quick. So that's going to be, I'm actually going to do that for next week because I want to give myself a little bit of time. I don't want to do it for just this week. So buy that, and it's going to cost me, what's my expense here? A little bit expensive. Now, you may want to consider doing it as a call spread if that's too much for you in terms of the bid-ask spread, but I'm going to jump in with again, I'm only playing this in a one lot. So this one in here, and again, the advantage of an options robot allows you to do a template so you don't have to sit here and watch these. I'm going to put this in with a $2 roll because this thing doesn't move as much. So now I have basically a template built out for me where if this thing goes, if I get into my trade, I'm going to be, you know what? Yeah, that gives me stops there. I want to add another stop on this one. So let's just do a quick stop and say if it goes down, because I want to have stops on everything. So let's say if the stock, let's do with option value. If option value from the value loss since inception is, let's say 25%, then I just want to exit the trade. I'll do that quick and then hit create. Okay, so that's just going to get me, oh, well, I already had one in there. So I guess I just didn't see it. So I can just delete the one I just created and click confirm on that. So that was already there. It must have just been over here. I didn't see it. So you can see there that all that is in there by me clicking one button and just to apply all of my trades to get out of the trade, roll, management, exit, that are all built into that now, and they're just sitting there. So if I enter that, then these bots will take over as a management bot on those. So a couple other names. Let's come back into that filter. Oh, that's the wrong one. I want to be over here. So let me go. I want to close analysis. There we go. So come down through this in terms of gainers. Anything else that jumps out at me that I've been watching? I don't know a lot of these names. A lot of these are just kind of, you know, smaller names that you don't touch. How about some of the downside? Obviously, we talked about Humana. And a lot of these are derivative trades of other companies that they're doing these stocks that are related to certain stocks. Pins I thought was ugly today. That was one to kind of keep on your radar, maybe the downside play. So let's just look. A couple other names. I know we're running a little bit long. I know we got some questions that are coming in. So a couple names that I had that I would keep an eye on. We did mention that IREN. So let's come back to that real quick in terms of that trade. Let me go back to, so that's the one we just entered there, right? So the other one I thought was very interesting that I wanted to mention was Wolf, WULF. This one I think maybe on your radar. Maybe if we want to wait till it gets back up through here, you start to look at this. This was in bankruptcy, and it's just really starting to take off here in terms of coming out of bankruptcy. The other one I had that a couple other names that we were watching today. Let's see, I had written down over here. So, you guys may have them on your radar as well. CORZ. I like the chart. And again, you're really close to the high of the day. So that's a good, strong finishing candle. High of the day was 20.01. So if I use that as an entry bot and say if it gets greater than, I'm going to give it a little bit of room, maybe something like 2015. So it's got to get through the high and then start to go. And I'm going to play, again, a next week option. So if it gets through that 20 area, I'm just going to buy this for quick. What that's going to do is just work the market for me, right? It's going to basically start at the mid or the bid, and it's going to work its way to the offer to end up going to a market if I can't get filled on it. So that's just the kind of how we do it. And again, gives you the ability to do that. Again, it's a $20 stock, so I'm going to do the same one with the roll here of $2. So every $2 that the stock moves, my option is going to roll up for me automatically, and then give me a quick stop if it rolls back from the inception of that option. So that is just a kind of standard one I use. You can create and add. You can add multiple levels. You can add different types of stops. That's all up to you in terms of the template you want to play. And we got several of them built in, several of them that you can save, right? You can make adjustments for spreads, for iron condors, all that fun stuff. So that is CORZ. And you have a question?
Well, I was going to ask a question. I was just going to wait until you were done. We have a question about NVIDIA. This person was looking for something 35 days out. He's looking actually to put on a short put, sell it. He's looking to put it on the bullish side. I'm wondering if there's anything you see either in the stock, anything you see in the puts that you look, the vol, whatever you look at.
Let's just look at the chart first. One, I would say if I'm looking 35 days out, that's fine. It's just it's a long time to basically say I think the stock's going to guarantee you're going to stay above your level, depending how far you can get. So again, what I would probably look at first is if I'm looking 35 days out, where's my straddle, right? What is that going to look like? So if I can come over here and I'll just go to something like, let's see, 35 days out puts me something like the 27th, right? That's 27, close to that. Maybe you want to go March 6th in terms of that. It gets you a little bit wider. So you want to be somewhere down, ideally down below 180. That's where they're suggesting that you could be in. So if you go back over and look at your options, and in terms of where you want to sell, can you get out that far? And let's see what we got out that far. So let's go. Here's the 27th. And that is, let's see. So we said below 180. Could you sell something like the 175s? And again, I don't know how wide you want to be, but a 175, 165. For me, when I'm selling put spreads, I try to bring in a certain level of premium. So maybe for me, it's usually around $1. I try to get a little bit over $1. If I feel like I'm getting too much premium, then I'm just going out further on strike. So if I can get something like a 170, 160, I'm going to be probably pretty happy with that. So if I sell the 170s and then buy the 160s, is that there? 160s. And look at my spread. I'm bringing in $1.50. I'm beyond my straddle. I feel pretty good about it. You may want to do some overlays of standard deviations, maybe a Bollinger Band, see if you're beyond the bands there, kind of where you're at in terms of another just kind of measure of where you want to be. And then to me, what I like to look at, if I'm looking at the 170 put, is I like to look at a level that on the chart that I know I'm going to be using as a protective stop. So for me, if this thing were to fall back down below this level, so 177.61, I would probably get out of my trade. Now, getting out of your trade is one thing. I don't just go and naked buy it back because you're going to do it at a loss. What I typically will do is buy back my short and let my long run. So if I have the 170, 160 put, you're like, okay, maybe I'm not going to make that much money. But I call this the morph, where I morph my position around, because if we really start to break down and this thing looks ugly, then you have the ability to get out of the trade in a way. So what I do is take whatever loss I have, and I'm trying to ride that 160 to get to break even. And when you look at spreads that way, you say, okay, if I can do about 75 to 80% of my spreads and make my 80 cents, I never really ride it to $1. But if I can make something like 80 cents, maybe a little bit more than that, make $1 on it. And on the 20%, I can get to roughly break even. You're going to lose on some, you're going to make on some, but you're going to come out a net winner on the spread trade, in terms of if you're consistent in doing your due diligence and you are aggressive with doing your morphs.
All right, perfect. We had another question about finding stocks that are benefited from the copper trade. I guess how would they figure out what stocks to trade if they're interested in copper?
And you're probably better off suited to kind of guide through that, of how you find the industry and you work your way down into your materials and trying to find, or your mining. I don't know how you guys separate that out.
Yeah, you have to go through and dig in. It's a whole I mean, I'm just looking like if you go up to the search at the top, like I just typed in Scott Copper Mines ETF COPP. Maybe that's one you can look at. Southern Copper SCCO is another one.
Oh yeah, there's a ton of ETFs that are in here. I mean, I would say the top two, if you're just going to talk about names, Southern Copper is obviously one of the largest caps in there. So that's done very, very well. It's just a little bit higher price to trade. You could play FCX, right? Another one that has just been absolutely on fire. The futures are tough, but like you said, what were the ETFs you had? COPP, I think, was one.
Yeah.
COPX was one.
And they all are at the top of their range, right? All these things have moved.
All of these are up here, and I think they're going to continue to run. I mean, I think they are on fire. Even though copper's not really running in terms of the future, it's on the upper end of its range, don't get me wrong, but the copper stocks have done very, very well. So I mean, you can see the volume that came in, they gapped this stuff up and they sold right back into it. So again, still looking pretty good here today. So I don't mind a lot of these, and I'm going to continue to ride them. I have a lot of not this copper ETF, but I have a lot of the metal names. I'd also look at platinum, PPLT, which is a good ETF to be able to trade that, and palladium, PALL, is a good way to trade that one as well. So they've gotten beaten down here today, and I'd probably look for a little bit of recovery out of those, to kind of buy the dip model on those as well if they can start to move.
Perfect. We had a question from Jim, and I don't know, this was from this morning. I don't know if it relates to his other question about, he's a big spread trader, and he's having a problem getting trades off in there, where he used to trade thousands of contracts a week, spreads, and seems like every spread he puts in, he gets someone stepping in front of him consistently. I'm wondering, are you seeing that in the market? And then he had another question on top of that. He asked, can Ryan explain gamma risk as it applies to market makers? That was his other question.
So the first question is the spreads. Yes. So I've had a lot of my clients complain about that. I actually had 4 or 5 today that, we put in different spread trades all day long. And, again, you complain about not getting filled, right? So and that has increased for me, where people are saying, I can't get filled. So we're always trying to then adjust, based off of what's going on and trying to find the sweet spot. But it does seem like the early bird gets the worm. Like if you're the first one in, you're going to get a fill, and then everyone starts to see it. So I think market makers are a little skittish, where they're nervous, especially if you're going in with big lots and they're like, okay, what's going on? Why is it a spread? Especially if you're coming in with size, right? And a lot of the bigger size now goes in as a market maker, or it goes in as a $2 broker, and works the crowd for that reason. So you are getting a decent fill. It really depends on your size and how big you're doing it. But I mean, if you can keep it under 10 lots, then I think you're going to get filled. You start getting into the 30 to 50 lots. I've had a lot of complaints where people are just not able to, everyone just kind of runs away. So yeah, I definitely have some problems with that. From a gamma exposure perspective, gamma, again, from a trade perspective, a little hard to explain in a very short period of time, but the gamma exposure to me is when you have high open interest around a specific strike. Now, if you're saying related to the market maker, market makers don't, they don't like to be short a lot of gamma at a specific strike, and there's kind of that pin risk there. And so let's just kind of look real quick at what gamma is. Gamma is a second derivative of delta, right? So when you own options, that means you're decaying away, but you have positive gamma. So if you own the options, you're okay with making that positive movement back and forth. If the stock goes up, you have more delta. If the stock goes down, you have less delta. Now, if you're inverted on that and you have short gamma, right, you're collecting all that money, right, with the theta. That's great. You're short options. But the problem becomes if you're short those options, you get on the inverse. So as you go up, you're getting shorter the stock, right, because you are getting shorter delta. So it becomes a problem for market makers that have this gamma risk. If a lot of people are coming in, let's say a big or maybe a not a very liquid name, and they're coming in to buy slightly out of the money options or a little further out of the money options, and the stock's moving up into that, that's creating that gamma risk for that gamma wall. So it becomes a problem for the market makers. And we've seen that, especially on some of the high flying stocks. A lot of the meme stocks get it, where they can create the short squeeze and add in the market makers on that short, because then they have to start to cover as they move up. So hopefully I did a good job of explaining that to you.
Yeah, that's perfect. We got time for one more question, particularly since it's the first user we've had come in from Mexico, and he was asking, greetings from Puebla, Mexico. How do you see the future of Euro copper? I guess again with the copper trade, that's ERO. I'm wondering if not that you can see into a crystal ball and see the future, but do you see anything in ERO?
I mean, it's pretty much similar to all the other ones. So I think the volume is good. We got a little drop off today. Again, maybe not picking up everything in the volume, but it looks solid, right? I think when you look at that, I don't know if it has options. I'm a big options guy. I rarely trade. So if it's in here with options, I'd probably be looking at the options and probably go and give myself plenty of time. I do what I call a diagonal trade, where I'll buy longer term options and sell the premium in the shorter term. So it's kind of like a covered call. If the options get too expensive, I'll do one of three things. So if the options are too expensive for you, I'll do a call spread. So you look at a call vertical, buy a call that's in the money or an at the money, and sell something out of the money. So that's the call vertical. I'll also look at a call butterfly, where I'll buy a call, sell two above it, buy one above that. And again, just because we're a little bit out of time here, I can't go through all these. And then the other one is a call condor. Again, this all means you have permissioning to do spreads in your account. But a call condor is buy a call spread and sell an upper call spread. It gives you a little more room to play it. So depending on where you are in terms of your account, how much money you want to spend towards each position, I would try to have on several of these copper plays, several of the silver plays, maybe even dabble a little bit in terms of the platinum, palladium, just in the metals space alone. And then you want to look at some of the other names we talked about. And you're going to have earnings that are coming out. They're going to be awesome. Again, my only concern with a lot of the earnings, I think what you're going to see now, and I wanted to mention this real quick, was I think you're going to start to see these companies that have products that need these metals actually start to throw footnoted disclaimers in their earnings calls, in their earnings releases, because someone like an iPhone who uses, I think it's like 34 grams of silver or 340 milligrams of silver in an iPhone, it's pretty critical when you see the price double in a year. So I think that's going to start to play and start to chew into some of these margins. And I think that's going to start to make things a little bit more real for a lot of these companies that need and use silver on a regular basis, and all these metals, copper, you name it. It's going to be pretty interesting how they play through earnings.
Yeah, I was actually looking at these ERO options for the individuals looking. Really, you also have to look at the options, and like this doesn't look like a heavily traded product. There are probably some
right.
big copper plays you can play where it's going to be much easier to get in and out if you're playing the whole copper trade rather than the
right. And FCX
stock.
is very liquid, and SCCO, Southern Copper is not as liquid, not as easy to play. It's a little wider in terms of the bid-ask spread. These are 990 offered at 11, so it's not that tight. And you want to just make sure you have enough volume in there. You're not the only person on the board. You don't want to have something with zero open interest on it.
Yeah, so just be aware of that when playing this, if you're playing it for the copper trade versus the individual stock. Great job, Ryan. As always, we're a little over. Mike says, great job, Ryan. I love this show when I can remember to get here in the afternoon. He's one of our morning guys, and he actually he asked a NVIDIA question this morning. I usually ask in the morning if someone wants a question to be asked today, and he asked about NVIDIA, and he actually did a credit put spread today. So good stuff.
Yeah, I mean, I think it's a good play. Just watch that level we talked about. I think it was like 177 and change. So if it drops down below there, you kind of have at least a mental spot. Alert goes off. Okay, you evaluate the market. You kind of get a good feel for it. So I think it's a good play, especially as semis were hot today.
Yeah, perfect. All right, Ryan. Thanks for joining us on Tuesday. I'm sorry we couldn't get it off on Monday. Last week I was away, so great job. Thanks for bringing it. We'll see you hopefully next Monday. Have a great night, my friend.
Take care.
All right. Hey, everyone. Thanks for joining another Market Chameleon After Hours webinar with Ryan Mastro from OptionsRobot. Remember to check out OptionsRobot.com. It's probably the best place to get your trades managed by an AI options event stream, which is super helpful, particularly if you work full time. You can actually have your trades running for you. Everyone have a great, safe trading day, and I will see you tomorrow morning, 9 a.m.